Welcome back. Joining us for a look at the equity space is Faheema Adia from Momentum Investments. Faheema, thanks so much for joining us today. Now, it is the last day of trade for the first quarter. It's been relatively good. We've seen markets hit record highs on the back of that AI boom and interest rate cut hopes. Faheema, do you think this momentum can be sustained even with interest rates cuts now expected to come later on this year?
Afternoon, Toleng. Thanks for having me. Yes, it's been a good quarter. We've seen the JSE also close on a positive note today, up about 0.8%. It's quite an interesting question, given all the gains we've seen in the last few months. Like you said, a lot has been driven by the AI sector. And the question to ask ourselves is that sustainable? How much higher can AI stocks go? But if we do look at it from a valuation point of view in Toleng, the price is being driven in the AI space by the earnings and the earnings growth. So from that point of view, I mean, these stocks are not actually looking that expensive despite the higher pricing from a valuation point of view. So for example, the likes of NVIDIA, on a forward PE basis, it's still looking relatively reasonable, which means there's still room for it to potentially go even higher. Of course, though, I mean, I think there will be a limit to how high it does go before we start to see things, slow down a bit in the US due to the higher rates, which they have kept in place there now. And probably once we see rate cuts in the second half of the year, then we'll start to see momentum come back. So I do think the momentum will continue for a while longer, but then it's likely to start coming off as the market feels the pressure from the higher interest rates.
Just picking up on what you said on interest rates, we saw the SARB keeping rates on hold yesterday, a move that was widely expected. What did you make of Kganyago's hawkish tone, and are we just at a point where the SARB doesn't really have much room and we kind of playing a wait and see game to see what the Fed does?
Yes, I think the SARB is in a difficult position because there's quite a lot of headwinds that are out of the SARB's control that it needs to be mindful of before it just goes ahead and cuts interest rates. So some of those things include the likes of high food inflation, and that's been driven by El Nino and inclement weather events. And then we've also got risks to the upside on the fuel price, given the Middle East conflict and Russia now looking to cut their oil output. And of course, the weakening rand. So there's a lot of headwinds, I think, when it comes to the inflation outlook that could, if we're not careful, push it higher. So the SARB is, of course, taking a very cautious tone. And they have said that it's quite likely we will see rates stay higher for longer. And we're now looking at rate cuts to probably only come in from July onwards. And some economists even say it could be as long as November. Yes. So, yeah, we'll have to wait and see how this one plays out.
That's the one I read, that we could probably see rate cuts from November. And I'm just like, wow. I guess no relief for consumers anytime soon. Faheema, there's trouble looming across the Atlantic. The UK economy fell into a recession last year. We saw figures showing that the economy shrank 0.1% in the third quarter and 0.3% in the fourth quarter. What's your overall sentiment on this economy? From what I've been reading, economists are slightly positive, saying that they do see a recovery this year.
Yes, like you said, Ntoleng, they are positive. They're actually referring to it as a technical recession because they believe that it will be temporary and that the UK economy will start to bounce off. But if we take a closer look at it, the contraction would have actually been more intense if it wasn't for the defense spending and the increase in general government spending. So if you look at the manufacturing sector in particular in the UK, it's actually quite a deep recession, which is reason to be concerned. And, like we've seen, the Bank of England has been holding rates steady because they too also don't want to cut too quickly because even though inflation there has been falling quite quicker than other countries, they also have a careful balancing act here because on one hand, we've got slow economic growth, the economy is in a recession. And on the other hand, though, they don't want to cut too soon, whereby it then pushes up inflation again. But overall, I think from our point of view, I think there's a bit of a negative sentiment there in the UK in terms of the overall outlook and the growth. And we're probably going to need to see some rate cuts come through before we see some real recovery.
A tight balancing act for Andrew Bailey over there, as well as Rishi Sunak, as it is an election year in the UK. Let's move over to some company news. Ascendus Health posting a slide in the top line, but it's managed to return to profitability. What have you made of that performance? I mean, this company is looking to delist after dealing with a lot of issues, from high debt levels to a leadership shake-up as well.
Yes. Like you said, it's in the process of delisting. It's been a bit of a tough ride for Ascendus. So we've seen that, like you said, the 5% decline in revenue for their first half. There's been subdued consumer spending and quite a lot of competitive pricing pressures in that medical devices market. So it is good to see, though, that they've returned to an operating profit after the losses that they incurred last year. They have made some headwind in terms of restructuring the business and significantly cutting the costs there. So that's resulted in some increases to the gross profit margin. But overall, I think there's a lot of structural issues, unfortunately, in this business. In terms of the medical devices business, that's due to the currency depreciation and also cost inflation pressures. So I think this business is facing quite a bit of headwinds this year.
Before I get to your stock pick, Faheema, Renen, in the meantime, is making progress. The group says its helium system integration is nearly complete. The share price, the last time I checked, was up about 2-3% today. Are investors just upbeat about the news from Renen, or is Renen just piggybacking off the positive sentiment we've seen on the JSE today?
No, I do think it's due to that positive update that they released this morning, whereby, like you said, the helium system has almost been commissioned. So that's definitely something the market has been waiting for. There's been a few delays on that side, but it seems they're making pretty good progress there. They've also said that on the LNG side, that the plant maintenance was completed. They've gone back now to delivering LNG to their customers, and they're expecting to ramp up on that side production quite significantly in the next few months. And I think what was really good to see is that Mahlako gas energy transaction was finalized. So they've now taken a 5.5% stake in the Virginia gas project. And Airsaw also completed its $7 million investment into convertible debentures in Renen. And what will happen is, when Renen hopefully lists on the US NASDAQ, that will then convert to equity. So I think the market is quite excited about this listing, which we're expecting will likely happen by June or July of this year.
Faheema, we have about 30 seconds for your stock pick. So what are you picking today?
So my stock pick is Samsung Electronics. So NVIDIA has recently launched some very powerful new AI chips, which requires the latest third generation memory chips. So these are known as HBMs. The market for HBMs is expected to expand almost tenfold to about $23 billion by 2026. And there's expected to be quite a supply crunch when it comes to the supplying of these memory chips. And Samsung, of course, is one of the biggest producers of these chips and stands to benefit quite significantly from this. Apart from that, Samsung has also been making better progress in comparison to Apple in terms of incorporating AI into its smartphones. And from a valuation point of view, we think it's attractively priced at a forward PE of 16.4 times, long-term earnings growth of 54%, and we're expecting upside of at least 20% on this one.
Okay, thank you so much for your time and insights. Samsung, a one to watch. That was Faheema Adia from Momentum Investments.